everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, the spot price of steel remained stable on the whole. The domestic spot price of hot-rolled coils remained unchanged, while the price of rebar rose by 20 yuan ton. At the macro level, according to the current CME FedWatch tool, the probability of keeping interest rates unchanged in January is 85.1%, and the probability of a cumulative 25 basis point interest rate cut in March has risen to 51.2%. The US dollar index fluctuated weekly, and the RMB exchange rate continued to strengthen, providing moderate support for commodity prices. However, starting from January 1, 2026, Mexico has imposed high import tariffs of 5% to 50% on Asian countries that have not signed free trade agreements. Among them, the tariff on China's mid to low-end automobiles has been raised from 20% to 50%, which directly suppresses the export demand of automobiles, thereby reducing the procurement volume of high-end steels such as cold-rolled sheets and hot-rolled coils, and forming a bearish factor for the prices of related varieties. Domestically, many regions such as Zhejiang and Hebei have included urban renewal, shantytown renovation, and inventory commercial housing revitalization in their 15th five-year plan, and these initiatives continue to be promoted. At the local level, the effects of the optimized housing purchase restriction policies in cities such as Beijing have gradually been released, but the national-level real estate and monetary easing policies are still in the brewing stage. On the industrial side, the weekly output increased by 76,000 tons compared with last week, and the overall resumption of production accelerated. The pig iron output hit the bottom and rebounded slightly, with the daily average output increasing to 2.266 million tons, close to the bottom range. It is expected to gradually recover to around 2.3 million tons in the future. Steel mills that underwent annual inspections earlier have successively resumed production, and the supply pressure is expected to edge up before the Spring Festival. Among them, the output of hot-rolled coils increased significantly by 109,700 tons week. The output of rebar increased by 38,300 tons week, achieving growth for 3 consecutive weeks. The increase was mainly due to the transfer of pig iron and resumption of production in some steel mills. On the demand side, the overall demand increased by 74,100 tons week. The apparent demand for rebar declined slightly, while the export orders for hot-rolled coils slowed down. The apparent demand for rebar was 2.044 million tons, a decrease of 22,400 tons compared with last week. However, the year-end rush construction in some areas in the southern and eastern China provided certain resilience, and the decline was lower than the same period in previous years. The domestic demand for hot-rolled coils remained relatively stable, but the export orders continued to slow down. The mainstream FOB quotation ranged from $460 to $475 ton, and the acceptance in the overseas market was limited. Regarding the export quota, the license management was officially implemented on January 1st. Some steel mills have obtained licenses, and traders are applying in an orderly manner. This has a short-term impact on ports and may even cause congestion, but it is more of a long-term regulatory guidance. In terms of inventory, the destocking speed of the 5 major steel varieties weakened compared with last week, with an overall destocking of 258,400 tons week. By variety, the destocking of rebar was 122,200 tons, and the destocking speed slowed down. The destocking of hot-rolled coils was 62,600 tons this week, which further eased the inventory pressure, but the inventory problem still exists. In summary, this week's steel market continued to destock, but the supply recovered and the demand was differentiated, with potential risks. In the future, it is necessary to focus on the rhythm of pig iron production resumption, the intensity of winter storage and replenishment, and the progress of special bond issuance. Without strong policy support, it is difficult for steel prices to have a trend-like rise, and they are likely to fluctuate narrowly around the cost line. Therefore, we adhere to the core principle of purchasing on demand and should be cautious in winter storage and replenishment to avoid blind chasing of high prices. It is recommended to replenish inventory in batches when prices fall to a reasonable range and control the inventory turnover days. priority should be given to rebar, with clear inventory destocking and strong policy support. Billets can be moderately allocated due to stable cost support. For hot-rolled coils, it is necessary to pay attention to the recovery of export orders and currently focus on on-demand procurement to avoid excessive stockpiling. Institutions believe that the inventory level will continue to ease, but the overlap of raw material winter storage and production resumption expectations after New Year's Day is expected to compress steel mills' profits. In particular, the destocking of hot-rolled coil inventory remains challenging, which restricts the overall rebound height of steel prices. In summary, steel prices have support on the whole, but the upside potential is limited. In summary, steel prices have been underpinned and are poised to trend upward recently. In terms of procurement varieties, rebar and billet will show relatively stronger performance. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.